The 4-step method to high performance trading is about bulletproofing your daily routines, your executions, your skill set, your mindset, and your beliefs to execute your edge trading in live time. Building your discipline and confidence in live time is how you will be able to produce those results consistently over the long term. The 7-step daily routine for high performance traders is about developing your process, your habits, your mindset, your beliefs, your skill set to master the markets. Bulletproof yourself for success and consistency over the long term. The links are in the description box below. Let's get started.
G'day trader, Stacey Burke from Stacey Burke Trading. Another short video to reinforce simplicity, reproducibility, and scalability. Markets only do 3 things every single week on any market, any instrument. And when we get signals and setups, any session, any instrument in Asia, London, or New York, coming back to a very simple understanding that markets only do 3 things. I'm focused on daily charts, looking for signal days, markets that close and break out. They can offer traders trend continuation trades. Markets that close and break out can offer traders potential reversal trading setups back inside of a range. And we have markets that stay in a larger trading range, and we can have a weekly template for either pump, coil, and dump, or dump, coil, and pump. And we can have the same thing occur on a day itself, a 3-session setup, a 3-day setup, and a 3-session setup. Number 1 thing to take away is focusing on the best setups. 90-10 opportunities, not trying to trade all the time, but focus on repeating 90-10 setups. I've mentioned this a couple times repeatedly. I'll keep saying this in every video. There are only 2 setups, buy setups and sell setups. That's it. Everything else is either a garbage chart, a messy market, or a chop zone, potentially putting traders into tilt. So there are 2 setups. You're either buying, selling, or you're doing nothing at all. And what a trader does on their own in terms of trading markets is entirely of their own discretion. I talked about focusing on levels, range, a daily range, because that is where I target the highest asymmetrical risk reward opportunity. How a trader trades is entirely up to them. You can trade any method that you want. You can trade any way that you want. I'm focused on repeating opportunities based on the behavior of price, the closing price of the day. We have templates that build a larger box, day 1, day 2, day 3. Now, I want to emphasize to traders, if you're catching moves all the time on the inside, you're missing my point. On the smaller time frame, you're chasing candles. Now, traders can argue, they can disagree, and it doesn't matter to me. I'm explaining to you what I'm looking at. The closing price of the day, a high-low range as the week evolves. I'm looking for the 90-10 repeating setups. The second thing I want traders to take away from the video today is that I'm focused on either selling high in a box from a level or buying low in a box from a daily level. Now, traders may redefine the levels that they're trading, but that range is where you can establish your risk reward. I'm not worried about counting pushes, measuring little bars inside. I'm looking for where the levels are. Day 1, day 2, day 3. Am I in a buy low opportunity or am I in a sell high opportunity? Have I had a market that's broken out and closed in breakout on a daily chart giving me a signal day, a market that has closed in breakout, giving me a signal day? If I come to my session in New York and the train has already left the station, I may have a first green day the following day or a first red day the following day. But this is the type of setup that I'm looking for. I want to be selling high or I want to be buying low. Now, I've talked about, personally, I like to look for shorting opportunities, but I'm long biased certain markets, i.e. the U.S. indexes. Why is that? Because over time, those markets will potentially continue to go up. My own personal opinion, which means nothing. The setups are what mean everything. So a lot of traders are getting caught up constantly every day and chasing little smaller time frame candles And I'll repeat, I'm targeting the daily time frame. I want to point something out to traders that there is no right or wrong in trading. You either have an edge and you stick to your plan, or you have no edge and you don't stick to your plan. So arguing, disagreeing with other traders, all those little things are ridiculous and they mean nothing. You either have a winning edge in the markets and you stick to your plan, or you have no edge, or you do have an edge and you don't stick to your plan. But it means nothing unless you have an edge and you stick to your plan. So we're looking at the Dow Jones 30. Now, each week I put up a chart of the weekly template. This can apply to any market. Now, I want to reemphasize to traders, I'm not trying to read markets. I'm letting markets set up based on this criteria, and I'm looking for the same repeating opportunities. So I want traders to understand the difference between predicting, figuring out, chasing, looking, all that stuff. I'm just looking for the same opportunities based on how markets trade. The same opportunities on any instrument. If it shows up in Asia and I don't get that trade because I'm in New York, so be it. The traders in Asia will have that instrument on their watch list. The same thing applies for London. Everything starts from Friday's closing price. Friday's the closing range of the week. Now, what does that mean? Well, sometimes Friday will put in the high or low of the week. But when it closes out the week, does it close in breakout? Does that instrument close in a range? And then on Monday, we have our opening range. We start from Friday's closing price. Whether there's a gap, no gap means nothing at all. The New York close. That's the last traded time in a market, Friday's closing price. So when Monday opens up, it's up 1%, it's down 1%, whatever. It establishes the new high-low heading into a week. Tuesday, day 2, typically expands the range. Now, we've talked about having range expansion opportunities. When we don't get a range expansion opportunity, we can still have a market that expands our high-low, and we're building a box. Have we broken any other higher time frame levels, weekly levels, daily levels? Have we been given any signal days at the close of the daily market? Levels, monthly, weekly, daily. Daily's the smallest time frame. I'll repeat, I'm targeting a daily range. And I've said this before to traders, in terms of shorting opportunities, I'm looking for A triple plus, A double plus, and A plus. And I want to encourage traders to build their muscle memory, not call every down closing day a first red day and try to trade it, or every up closing day a first green day and try to trade it. Understand where the best setups come from. We have markets closing in breakout, consolidating, breaking out again, and reversing, an A triple plus opportunity. We have markets breaking out, consolidating, traders getting caught, trying to short a move that in a market that's continuing to make higher highs and higher lows. But it was a first red day. Yes, and you got caught trying to short a market down low. Remember what I said, I want to sell high if I'm selling. If I'm buying, I want to buy low in a market that is potentially still going higher. If I'm selling, I want to sell high in a market that may now be breaking down. So it's critical to build your muscle memory. When you get behind closed doors at a keyboard is your own responsibility. Just because a market closes as a down closing day does not mean that it is a first red day setup. So that's critical. Master the best setups. Front side, back side. Recognize what an A triple plus, A double plus, or A plus session opportunity are, whether you're going long or short. Remember, there are only two setups, buy setups and sell setups. If you're chasing smaller time frame candles, I don't know what that is. That's your decision. So what you do, the trader behind the keyboard once the door closes, is your responsibility. Recognizing what A triple plus, A double plus, and A plus setups are allow you to manage your position sizing and capitalize on the highest risk-reward opportunities on the best engineered instruments in your session. And I've said this before, 2 to 3 of those a week can significantly compound your trading account. Now, we've been through this the last few weeks in a row. Each week, traders are trading on the smaller time frames, and then they're saying, well, yeah, but it was a first red day, it was a first green day. And I'll just redraw some simple levels from the daily chart just to demonstrate to traders. Even though we've had a market trading back and forth on a daily market, we have one large day from back in August, and we started our new month, and the market broke down and took out higher level longs. This is a daily chart again. Then we have a large range day again, non-farm payrolls, and a market that effectively has still been in a higher time frame trading range, even though we can see closes outside of daily high-low levels. We are in a larger trading range across the board. So traders are calling every down day a first red day, but we still are in a larger trading range. We're just in a high-low trading range. So traders need to stop and ask themselves, am I trying to trade markets every single day because I see a market close down or close up? But where is the actual setup? Do I have a 90-10 well-engineered setup, money-making setup in the session that I'm trading? Now remember what I said earlier, agree, disagree, all that means nothing. Do you have a 90-10 well-engineered edge in your session? Do you have your edge? Does it present? Are you executing the trade, or are you chasing movement and candles every single day looking for trades? The same process applies every single week. Friday was the closing range of the week. Remember, I'll repeat the phrase over and over and over again. Markets only do three things. What traders do, though, is completely up for discussion because they do all kinds of crazy things. My response to that is get focused on mastering one thing. Stick to the plan. Rinse and repeat every single day. Follow your process. That's there to protect you, but also to identify the highest probability/possibility candidates every single day in the session that you're trading. I said that everything starts from Friday's closing price. Now we can do this on any index, any market, it doesn't matter, but I'm identifying the setups that presented this week. On the Dow, as I said earlier, 2 to 3 scalable opportunities can significantly compound your trading account. Friday's closing price is where everything starts from. Now, traders are coming here every day trying to catch the moves, and I just repeated it a second ago. I'm looking at markets at the close of the day for daily signals. Monday establishes the opening range at the beginning of a new week. We have an inside day, which is a signal day, and we have our initial high-low at the beginning of a new week. That's an inside day, page 69 in the playbook. Now, we went over this in a previous video regarding the S&P a few weeks ago, that right off the bat we have inside day breakout traders in the market. They're in the money all day. We have higher highs. We have a dump and pump on day 2, expanding the range. Now, I want to just emphasize to traders, whether traders trade this or not is up to them. Is that the setup that you're hunting? I said a moment ago, if I'm trading something, I want to be buying low or selling high, and we're still inside of Friday's range. We have a larger trading range. Day 2 typically expands the range. We have a session opportunity for traders to buy low in a market that has already broken out. We have breakout traders in the market. If they choose to trade this, the 10 a.m. club, the new 4-hour rotation, has a buy low opportunity on the day down towards Friday's closing price. Higher highs, dump, and pump. The buy low setup. Now remember what I just said. We have breakout traders already in the market before the session starts. If traders want to sell low, that's up to them. If traders want to buy high, that's up to them. I'm looking for buy low setups or sell high setups. There are only 2 types of setups, buying or selling, whether it's pump, coil, and dump, or sell high, A top, or a dump, coil, and pump, V bottom, buy low setup. Now let me repeat, this is what I'm looking for. So agreeing, disagreeing, all that stuff means nothing. These are the setups that I'm hunting based on the daily template. Monday, Wednesday, Friday, whether it's dump, coil, and pump, or pump, coil, and dump. A tops, V bottoms. Now on Wednesday, we've talked about two types of setups on a day 3. Reversal or trend trade opportunities. Now you'll notice again, we're still in a larger box. A box. Price is always in a box. Day 1, day 2, day 3, we had PPI on our high impact major red news calendar. The New York indexes open at 9:30 a.m. New York time. Traders are trying to trade PPI and catch the move to the high. I caught the move, and I repeat to traders, I'm not even touching these markets until after 9:30. We talk about the 10 a.m. club. Now you'll also notice we talk about the escalator up. Day 1, day 2, expanding the range. Day 3. Now just noticing also the higher we go, the higher level longs are buying up high. Higher level longs are buying up high. We have PPI going up into the high of week level. Day 1, day 2, day 3. Are we working the high or are we working the low? Wednesday, day 3, we have a market that closed in breakout. Our high of week level is in place. Now, we said a moment ago that markets only do 3 things. We have a market that is in breakout. If we're looking for rinse and repeat setups based on whether markets succeed in breakouts or fail, and we're targeting a daily range, I want to be, as I repeat, selling high. Now, if I can't sell the high because we've got high impact major red news, my market isn't open yet, I'm sitting on my hands and waiting. I have 2 blue lines. I repeat the phrase 2 blue lines. I'm focused on 2 blue lines. That's where I want to be selling and buying. This is a 15-minute chart. Well, obviously, when the market opens and I'm targeting that 10 a.m. reversal, based on the 4-hour rotation, my next level of importance is going to be closing price. And why is that? We have higher time frame buyers in the market. We have the level where our pump began. We have a market that's closed in breakout. Pump, coil, and dump. When we go down to our 5-minute chart, we can put our basic entry criteria on our chart. Page 29 in the playbook. And as I've said before, once traders have built their muscle memory, you don't even need that because you will understand the behavior of price and the rotation of time. 10 a.m. we have our parabolic explosive collapse back down to where the pump began. Now we're only demonstrating this on the Dow. There were other opportunities on other instruments, but following the simple process and sticking to the plan and sitting on your hands in between rather than chasing little candles and pushes and gaps and sweeps and hunts and hunting rinse and repeat scalable opportunities, targeting asymmetrical risk reward. Now go back and you can study the other videos. It's in every single video, a simple process: entry, stop loss, and a take profit level. Once you have your levels, traders have talked about, can you go over the 1-minute chart? It's timings, levels, behavior of price. As I've said before, once I know I'm getting in, and I'll scale in and I'll manage my risk and I'll have a take profit level. Rinse and repeat, keeping everything simple. The instrument is irrelevant. This can happen on any instrument. We didn't trade the news. We waited for the news. New York indexes open at 9:30. We let the market open. We know what our setup that we're hunting is. Establish a high-low on the open. We're selling high in a higher time frame box. Day 1, day 2, day 3. Now, when Wednesday closed, we have people messaging me and on the chat room and live trading and everything else calling this a first red day. And as I've said before, get off of all your chat rooms, get off of social media, get out of live signal rooms. What traders do is up to them. But you'll notice again, this market has not even broken out of our larger box. All we've done is trade up to the top of the box and dump down into Friday's closing price and the low of day level of Tuesday. It's not a first red day. We're in a box. We're in a box that we had a sell high setup. And funny enough, if traders would just be willing to sit on their hands, they'll recognize also that we're sitting at the halfway point of the box, 50% level. We've traded down into Friday's closing price level and Tuesday's low of day level, and we've coiled sideways into the close. A dump into the close. So although it's a down closing day, we're still in a larger trading range. It's just a big box, and we've traded sideways. Sideways until we get into our US window, where the market then has broken out, and we had CPI. And the great thing about having a high impact major red news event at 8:30 for a US index is that we can let that market whipsaw back and forth. And as I've talked about, there are 4 types of news candles. Once that high impact major red news has been released, we can go back to work and let the market set up. We're on the back side of the week. Wednesday is the reset. It becomes the new day 1 headed into the back side of the week. Thursday is day 2. Thursday's day 2 on the back side of the week. We can look for 2 types of setups on a day 2. Now, in this particular week on this instrument, we had our range reversal on the Wednesday, day 1, day 2, day 3, reversing from the high of week level. We're at Friday's closing price. We've dumped down from the high of week level, and we're coiling sideways. We've made higher highs. We may now have a market that offers us a range reversal back in line to the high of week level. Remember what I said before. If I'm selling, I want to be selling high. If I'm buying, I want to be buying low. Whether that's a first red day, a first green day, or we're just in a higher time frame trading range and I have a 3-session setup. We had a 3-day setup on Wednesday from the high of week to low of day level. When we trade New York, I'm looking for 3-session setups, Asia, London, New York. But we have levels targeting daily ranges. We have a market that has closed as a dump day, a down closing day in a higher time frame trading range. It's coiled sideways. We've made higher highs heading into our New York open. Now, this is the best part. As I said, we had CPI. The market made a higher high heading into our New York session. This is our basic model for trade entry criteria, page 29 in the playbook. The whole purpose of the basic model is for traders to remove analysis paralysis, keeping things simple. Not trading every single day with the EMA on the chart. Setup, timings, levels, then we go to our basic model to confirm our entry. It's a visual confirmation for traders who have yet to build their muscle memory on a well-engineered template. No different than the first bounce. No different than the first bar or first bounce. It's an explosive opportunity at the open of the market based on the higher time frame template. Now, I want traders to stop and think for a moment and recognize how long this market has coiled sideways. So we're sitting on top of Friday's closing price back into Monday's opening range. This market has coiled sideways for 12, 13, 14 hours, almost 16 hours. Dump, coil, now do we get the pump setup? Simplicity, not trying to predict, not trying to read markets, not trying to catch a move, not trying to call it a gap, a sweep, a hunt, a soup, or anything else. It's a dump, coil, and pump setup. That's it. Keep it simple. If you have a lot of gibberish in your head, you'll have analysis paralysis. If you're looking for a buy low setup, and that's what you're hunting, then you'll execute the trade, you'll manage your risk, you'll put a take profit level in place, or you'll hold till close. Why hold till close? Well, traders from the masterclass will know that Thursday is our hold till close opportunity if it presents. And when we put our ACB template on our chart, we have our ACB hold till close trade setup opportunity, keeping everything simple, repeatable, and scalable. This is a beautiful, well-engineered ACB template opportunity. And funny enough, it even looks like the t-shirt, ACB. Why? Because it ain't coming back. So now we're into Friday, the closing range of the week. We have a market that's closed in breakout, and some traders are going to trade their favorite instrument. Some traders aren't going to trade at all. Some traders are going to potentially look for an opportunity after major red news. We have major red news on the calendar. But one thing I want to just suggest to traders is please don't call every down closing day a first red day. Don't call every up closing day a first green day. What setup are you hunting? Recognize the repeating templates. Friday's closing range. Monday's opening range. Tuesday, day 2, the initial balance. By the time one of those two extremes has traded, we may now have our high or low of the week in place. Rinse and repeat. Selling high opportunities and buying low opportunities. Keeping everything simple. Not focused on the little bars. What day is it? What level am I at? What time is it? What setup is potentially now setting up as a 90-10 candidate? Rinse and repeat. These two opportunities significantly compounded traders' accounts this week. We had opportunities on other indexes on day 3. The Russell was a beautiful pump, coil, and dump template. So recognizing pump, coil, and dump, coil, and pump, or an A top or V bottom reversal setup opportunity can significantly compound your trading account, making trading a pursuit of pleasure and a highly profitable one. Keep it simple, traders. Rinse and repeat any instrument, any session, any market. Have a great day. Keep it simple. End the week on a strong note. Fall in love with the process, and the process will love you back. Have a great day, and may the markets go with you.